morning, all eyes are on the stock market, and this really comes hours after Wall Street closed on its worst day since 2020. Of course, we know that the markets are reacting to President Trump's sweeping tariff announcement this week. Local businesses like Build-A-Bear, Stiefel, Footwear, and Enterprise all took a hit on the stock market. So despite this sharp drop, Mr. Trump says he thinks things are going very well, arguing that the economy is like a sick patient in recovery. So we have Jeff Sachs from Sachs Financial. We have him back. He's a fan favorite here on Today in St. Louis Plus. Thanks for being here.
Glad to be back.
Okay, so I'm guessing we shouldn't really be surprised with the market drop, right?
No, not really. I mean, I think that we expected some tariffs to happen. I think the shock really came because most folks thought that the tariffs were going to be targeted and at specific areas and industries and maybe even specific companies, not across the board. And so what we've seen is a general reaction of the market saying, what is going to happen? And you know, the stock market is an emotional thing at this point. It hasn't been really based on technical performance of companies. It's been about what we feel, what we think is going to happen. And because these tariffs give us so much uncertainty about what's next, you see the market react.
Yeah. Before we get to the question here that was just sent in, I'm so glad to have you here. It's one of those things where the president talks a lot about he had tariffs in the first term.
Yep.
And like, hey, you didn't make a big deal then, and now you do. Are they bigger tariffs here? Okay.
Yeah, I think that's it, right?
Yeah.
And the idea with President Trump's first administration was to use it as a bargaining chip to try and do some things. And we saw some positive movements there. And then to come back this time and say, we're going to do it even bigger, has had the effect that we're seeing. So the question really is, which nobody knows right now, is how much of these tariffs are actually going to be permanent, or how much of them are negotiating tactics
that will get pulled away or something. Okay.
That, you know, if you're nice to us, we'll be nice to you kind of thing. So because it's so uncertain, we see the stock market have this volatility of this up and down.
Okay, well, we definitely have some questions this morning. I want to get to one, and I think this is interesting because this is from Jenna from Shelton, Connecticut.
Wow.
Thanks for watching in from Connecticut. And I'm not sure you can really answer all this, but this is kind of the gist. My question about tariffs is, how much will the price of certain things increase due to them? Or will the people who own certain things change the size of products to keep the price the same or similar? So, you know, like the shrinkflation that we've talked about. That's hard for you to answer, I'm sure, but things across the board are could be more expensive.
I mean, right? I think right now the concern is what is going to change, and we just don't know because it happened, you know, 2 days ago. Yeah. So I do think that there will be some reactions. It's possible that things could become smaller. It's possible that costs could go up. I think it's more likely that costs will go up. I don't think that that in general we'll see costs go up tomorrow. A lot of companies that have durable goods have stockpiled. So as those stockpiles or other those things dissipate or get used up, then we should see some price increases if these tariffs.
I don't trust anybody though. I mean, look at egg prices. Egg prices have gone down, and these grocery stores are still charging us an arm and a leg because they need to make up those profit losses.
Wow. And there's still so much fear, right? The fear is kind of warranted right now, correct?
Yeah, and the fear again is driving all of this uncertainty. And you know, if you're close to retirement or thinking about retirement and you have money in the market, it is a concern right now. And so you have to kind of keep an eye on that. And even though that you're afraid or fearful of what might happen next, I would say don't make any rash moves, right? Don't wake up today and say, oh my gosh, the sky is falling, I need to sell everything. Now, I want to be careful here because I'm not giving advice. I'm just saying in general, let's take a minute before we take some action.
Okay, so then I do have a question because, you know, we've done several interviews before. Is now a good time to retire? Or do you think that, because you've also talked about like semi-retirement, partial retirement. What do you think?
So I think that if you are working with a financial advisor that's helped you put a plan in place and you know where your income is coming from, then retirement plans shouldn't be that affected. If you have been relying on the stock market or the probability that the market will be up when you retire and that the market will be there and provide you returns and give you income, then you may have to delay your retirement. And we saw that happen the last time we went into one of those big recessions. So what we know historically is that this too shall pass, right? We know that the markets are going to go down, and we know eventually they will go back up.
Thank you. He's
Eventually.
helping.
Eventually.
Yeah,
Helping to
eventually.
calm us, really.
Take a breath, relax.
you.
It'll all be okay. Eventually.
Eventually. All right. Well, Jeff, thank you so much for coming in, because I
Absolutely.
know that when I called him last night, he was at a band thing for his kiddo.
Yeah,
So it's
yeah.
like,
Unbelievable.
Can
Did
you
a
come
great
in?
job.
Can you
His
come
solo
in?
was
Did he
great.
do
Oh,
okay?
He did great.
Oh,
He did great.
wonderful.
We needed some video on that,
Yeah.
but
Yeah.
okay, next time.
Yes,
Yep.
next time. We can also, by the way, if you want more information, you can always go to sacsfinancial.com. Thank you again very much.